So welcome to another episode of the Pure Property Podcast, where we talk about all things property and property investment. If you haven't listened to the show before, my name's Toby, Director of Track Capital, a property investment company. And with me, I have Matt, who's our UK and Hong Kong team leader, one of our top consultants, and he'll be joining me today in this episode. How you doing, Matt?
Yeah, all good. Thanks, Toby. Thanks for having me again. Always good to be on. Have you been okay?
Yeah, good. I understand you had a trip to Manchester last week to go see some developments. How did you find it there?
We took some of the team out to Manchester. We saw some of the stock. Really impressive. Really impressed with Manchester. I mean, we've all seen it happen over the past few years. It's come leaps and bounds. In terms of with the market and also the growth and the figures, but I was really impressed by the quality, and we were really, to be honest, looked after very well. We went in the showrooms, and obviously that is what we do as a company as well, is going out and checking out what obviously the investors will be buying. So yeah, that's something that we like to do. We like to do regular visits if we can, get the team out, get to see the locations that we're kind of dealing with on a day-to-day basis. So it was really lucky as well. We had a sunny day in Manchester, which I know is not always the case. But yeah, really good. Impressed with the level of quality.
What would you say was the best development you saw there out of the ones you went to look around? And
Are we name dropping?
Yeah, go on, name drop.
Yeah, there was some good ones. So we deal with, for example, I know that we obviously deal with Renica, who are a top firm, Salboy, and also the Alliance Property Group as well. So I'll be honest, I was really impressed with all of them. But yeah, in particular, I think a standout point was Viaducts. Very impressive development. That we actually do have a couple of units come back actually. But yeah, fantastic development, really high quality. But yeah, I mean, all of the guys that mentioned there are definitely the top performers in Manchester, and you can see why in terms of not only the developments and how amazing they are, but also the way the process and the sales process goes through, looking after the clients, making sure that what you're investing into is genuinely going to be a good investment over the medium to long term.
Yeah, Manchester is a fantastic place, and we've spoken about it a lot over the time we've been doing this podcast, and yeah, it's amazing to see the transition that it's going through, but also the pipeline of transition that's going to continue to take place, which is exciting. So no, I'm glad you went there, and I believe you'll be going to some more cities to catch up on new developments that we're launching, involved with. So exciting times ahead for you and the team to get traveling around. So that's
definitely,
good.
and also for clients as well, taking some snapshots, looking at the show apartments. So yeah, we'll look to definitely do a lot more of those trips.
Good. So a couple of things that we've noticed in the headlines this week, which we'll discuss and go over. And I think the first one, notably, is the article about the UK house building activity dropping at the sharpest rate for 3 years. So that's UK house building new homes dropping sharply. So we've spoken about this because, of course, we're involved in the property market, and that involves house building, surprisingly enough. So it was something that really caught our attention. With the UK house building dropping, so the number of houses and properties being built across the country, the UK, it's not a surprise. With everything that's going on in the economy, house builders have seen costs rising, which has really stretched their profit margins. So they're sort of tightening on that side of things. So naturally, they're going to contract and hold back in terms of building properties. Now, it's quite frustrating because we before the pandemic, during the pandemic, we've always been in a house building crisis. We're not building enough properties that are needed. This is only going to exaggerate that further. So not building enough houses isn't good across the board. People need new homes. We've got a lack of supply, and that's not being fixed. Every government comes in and says, yeah, I'm going to fix the housing crisis problem, I'm going to build this many homes a year. We're not meeting the quotas, and each year we don't meet the quotas. That then snowballs even more, and it's getting worse and worse and worse. So look, we're in a situation where the hole we're in is going to be very hard to get out of, but it doesn't mean that we shouldn't be looking to improve it. So I don't think this is a great thing to be hearing. If you want to take a positive spin on it from a property investing point of view, if you own property or buying property or renting property, however you're investing in it, if there's a lack of supply and that supply doesn't look to be increasing anytime soon, then that does one thing: it drives up prices, or it will keep the market steady and prop the market up. So that's maybe a positive spin you could take on it, but overall it's not good. It's something that needs to be sorted, something that I've been screaming about for a very long time, and I really do think that the government needs to really pull their finger out and look at a real practical and realistic way to tackle this problem, which I don't see happening.
Do you think it's anything to do with potentially the councils being a bit difficult in certain situations, or?
I think that stems from the government down. Yes, the councils aren't the best. I mean, planning is an absolute nightmare. It's shocking.
You should know yourself, too, right? Looking into it at the moment.
100%. And yeah, I'm going through certain planning processes as well, and it's just an absolute nightmare. And any developer you speak to as well, most places, there are some councils that are fairly decent to deal with, but even then they're not to where they should be, but they are decent enough. But most councils are a nightmare, and it's just not good enough. And then they will also moan that there's not enough homes in their local area, yet the planning process, the length of time, and just yes, some of the idiocy that goes on in some of these locations is just, it's shocking. So yeah, across the board. But yeah, that stems from the government down. And yeah, it's just a nightmare.
Just to add on that, Ty, what would you, from another point of view looking at, would you think, because obviously, as we said, there is an issue with the supply and demand right now, do you think in terms of for investors in some aspects, it's still partially a good thing because it's pushing maybe rents up because of the amount of stock that is available? It's less than what they need to be to fulfill a lot of people who are wanting more homes and etc. and supply, I guess.
Selfishly, yes. From an investor, landlord point of view, correct. Yeah, that will happen. And also from the property price point of view, all the while that there is that imbalance, even with other stuff going on in the market, it's still going to not really dent the property market because of that. And that's one thing that gives a lot of confidence in the property market over the medium to long term, is that issue is not changing unless someone's got a magic wand to build a crazy amount of properties overnight. It's not going to change. So from that point of view, from a property market point of view, it's why prices are sort of holding firm, and we won't see a potential massive crash anytime soon, in my opinion. But the next thing that I suppose we should talk about, which has been in the news across the board, the media, TV, newspapers, is about the mortgage market at the moment. So we're going to go on and do a property market update based on the data we've had from the latest Hometrack Report, which was released earlier on in the month. But before we go on to that, we should talk about the mortgage market, because as we've seen, rates have been going up again. And this is something that is worrying a lot of people, and they're reading a lot about it. We're seeing people that are buying at the moment. Some people are hesitant. I mean, from your point of view, what you're seeing going on in the mortgage market, what's your take on all of this?
Yeah, I think it's one of those things that I think, as mentioned even just before, the past 6 to 8 months, the whole mortgage situation has been a massive talking point.
It's been crazy,
especially when looking into it, not only for investment, but for residential purchases as well. It's affected a lot of people in terms of what rates they're able to get access to. But when speaking to brokers on a kind of day-to-day basis, I mean, we were starting to see that decline. And I think much more so, we were thinking it would be a little bit quicker, hopefully around summertime leading towards the back end of the year. But it does seem as though it will decline eventually, but it doesn't seem as though it might be towards, when speaking to brokers anyway, what they're saying to myself is potentially towards more next year now. It's more looking likely. But look, we can't always predict exactly what is going to happen. We need a lot of factors to implement different things happening with the mortgage market, etc. And maybe it may be where certain kind of government, etc., might need to step in and do something about this. I mean, as I said, it's an interesting topic, and yeah, we do think that maybe I would be more confident anyway in thinking next year it would start to come back down. So buy off plan.
Yeah, that's
could be a good option if you're still wanting to access and enter the market and you're a bit worried. Then yeah, off plan could be an option for you. What about you, Toby? What do you think about the mortgage market right now?
Yeah, look, it's not ideal. Rates going up is never ideal because it stretches affordability levels. It stretches returns for investors as well, so it's never ideal. That said, I don't think it is as scary as a lot of people do think. Because when you look at the numbers and the data, so it's increased 0.38% as an average. So that's what rates have gone up, so which has taken the average 2-year fixed rate to 5.72%, and that's from Money Facts, that data there. Well, in context, for £250,000 mortgage, if you were to have that today and move on to that rate, sort of going up, or you were going through the process of taking a mortgage at the previous average rate, it puts your repayments up £57. Look, that's not ideal, and that is a lot of money to a lot of people, but it's money that you can find elsewhere, save elsewhere, a couple of Netflix subscriptions or I don't know, gym membership or something. But look, it's doable. So I don't think it's going to dent the market as much as the media or people are perceiving. Of course, it will put some hesitancy and drop a bit of confidence, but I don't think it's going to be that bad. Also, what you have to remember is back in November, the rates had jumped up over 6% mortgage rates because lenders were in turmoil over the quasi-quarting mini budget fiasco. It was absolutely crazy. So look, when you look at it, that didn't really kill the market off, and we're probably still seeing the effects of that now, because that was back in November when people are buying, and we're seeing sort of that come through now. So look, not ideal, but I don't think it's as bad. And swap rates have gone up because the finance market and sort of lenders, etc., are anticipating the rates to go up. Swap rates have gone up, so and because of the cost of lending and borrowing, it's gone up, which is bound to happen in anticipation for the Bank of England putting a rate up to curb inflation. Now, we're not seeing inflation sort of tail off as quick as we'd initially hoped. So that's why we're seeing this take place, because people are anticipating the Bank of England are going to raise the rate again. So lenders are pulling theirs and saying, right, we need to build in our potential margins. Once that starts to settle, which it will do, again, the industry is anticipating the end of this year, potentially beginning of next year, rates will come back down, more products will come back to the market, and it will be better. If you're buying now in this market, I've heard some stupid people say, don't buy, it's crazy, you shouldn't be buying right now. That's mad. Like, if people had taken that advice when Brexit was announced or COVID took place, look where they would be. Now, I'm not saying we're going to see prices explode like they did previously, but what I'm saying is if you sit there and do nothing, the opportunity cost is usually greater, especially when you're, as I keep saying, when you're investing in property for the medium to long term, you're going to do well. And
in the right location.
In the right location. And that's the thing. It's not don't buy now, it's buy correctly. Run your numbers properly. Make sure it's fitting your strategy. Just buy correctly.
I think what you said, I think we've spoke about a couple of times off camera, etc., is I think you have to adjust to the market conditions. It's not about being scared and not kind of, or shying away from certain times when the market's maybe a bit scarier with scary headlines, etc. But as you mentioned, I think it's being able to adjust and knowing when to shift.
Yeah.
I think it's like in terms of with that and with business in general, knowing where to go and being able to adapt and see maybe if a strategy once was working a couple of months ago, maybe look at something else or speak to someone else and you can gain more knowledge.
Yeah, well, I could just tell you it's not putting me off investing at the moment. I'm still actively investing and looking at different projects. Just again, I've got the long-term vision. Don't get me wrong, if you're looking to flip a property in the next 6 months, buy now, flip it in 6 to 12 months, I would be hesitant unless I'm building in extra precautions. But look, with the way I'm investing for the medium to long term, it's not affecting my strategy, to be fair. Right, let's go on to the property market update then, looking at the data predominantly from the latest Hometrack report. So one of the headlines in the Hometrack report, so for anybody that doesn't know the Hometrack report, it's something that Zoopla, one of the biggest property portals in the UK, bring out. So they put together and collate all the data and they produce the Hometrack report on a monthly basis about property prices, and they have a quarterly report about rental prices. So this one is the property prices and it covers the data from April. So although it was released at the end of May / beginning of June, it covers the data for April. So one of the initial headlines in there was prices fall 1.3% in the last 6 months, but the rate of falls slows down. So reading that, you could take that as, oh my God, prices have fallen in the last 6 months. And you could say, yes, that's not ideal. But again, when we're looking at the overall picture, it's not that scary. And also you've got prices on a year-on-year basis are still up 1.9%. So they're slowly obviously coming down and tailing off, but they're still up on a year-on-year basis at 1.9%. So one thing I would say about that is, again, what people have to remember is we've had very aggressive growth during the COVID period, the pandemic period. We had massive growth, which we always say, look, couldn't carry on. It just couldn't. And what we're seeing now is the market settle. So overall, that average is still on a year-on-year basis up. We are seeing, as I said, you had that 6-month fall, which isn't ideal. But when you then, as I said, look at it over a longer period, it's not that bad. We've had massive amounts of growth. And yeah, we're seeing the market settle and sort of recalibrate. Similarly, you see with stock markets, they shoot up, then they'll come back down a little bit, then they'll tail off.
It's the natural property cycle, isn't it? It's going to happen.
Yeah, and it wasn't sustainable to keep aggressively growing up. And I don't think it's a cause for concern. It's just leveling out. It's becoming a more manageable market. It's becoming more sustainable. And that's what we like to see.
Yeah, absolutely. I agree.
Yeah. And although we've seen that, we've also seen buyer demand in the report is increasing or improving as well, which is good. So we're seeing the confidence come back to the market, which is also good. And also sales have also increased. So sale agreeds have gone up. So sale agreed is when a vendor or seller puts his property in the market and the buyer and the seller come to an agreement for the property purchase and sale.
Which is definitely, I think, a good sign. I think in terms of that, it shows that people are still having confidence in purchasing, not scaring anyone away, especially with, as we said, the scary headlines of what's happening. I think, if anything, that's a real positive to take, that people are still actively in the market, and to see those figures go up in terms of them sold agreed figures. Yeah, I'd take that as a massive positive in the market. Yeah, and you have to remember that is an average across the UK. So the actual figures do vary from region to region, to town, city to city. So again, this is where it's always key about looking at specific locations. We always like to go, as I say, hyper local. We look more focused in a smaller area, which we can then look at the data and really assess. So yeah, we're seeing little pockets still performing strongly, so that's positive to see. I mean, you've got London, for example, house price inflation they've got in the Hometrack report ranges anywhere from
down 0.2% in London to up 3.6% in Wales, for example. So it does vary, and that's something that you have to take into account. Yeah, of course. And we're seeing more sellers come to the market according to the latest Hometrack report. So new sales agreed, as we mentioned, in the last 4 weeks from that report when it was released, are 11% higher than the 5-year average. So that's sale agreed. So there's still business going on, isn't there?
Yeah, for sure. As you mentioned, Toby, I think a lot of people are probably thinking that the market is dying out and there's no activity going on, which clearly we can see with the data and the statistics that it definitely is. And as we said, it's probably a lot more people. Obviously, that's a mixture, I'm guessing, between residential and investment purchases. So as a whole, I think, it should keep giving confidence in terms of that. Yes, it might be a lot of people in the headlines are once again uneasy and it can be a little bit unsettling, but there's still many positive things happening in the market despite the headlines which are suggesting otherwise.
Yeah, and the homes coming to market are up as well. So the amount of properties coming to market is up. So we're seeing more sellers come, which again, we mentioned previously is a sign of confidence. So what that means is sellers are having to be more realistic with their pricing now. As we spoke about, gone are the days where you can just put it on for silly money and have queues of buyers out the door. People are being a lot more selective, cautious when they are buying now, of course, because they're being stretched with affordability. But saying that, you're seeing the actual prices being agreed aren't being cut as much as some may assume. I mean, looking here, it says 18% of homes listed for sale on Zoopla have had their asking price cut by 5% or more. Now, 18% isn't a big number, and if you looked at the market as a whole and read some of the headlines out there recently, you'd think the market is in turmoil. But 18% for the whole market having an asking price, and again, you have a lot of properties in there that may be being unrealistic with their prices and having to cut it.
I think you said it in the last episode about estate agents trying to win the business.
Yeah.
So they will be listing at a higher price.
Exactly that. And we're seeing, according to the report as well, more landlords are adding their properties for sale to the market. So we're seeing a headwind of landlords selling up. Now, what do you put that down to?
It's one of those things, I think, that there's different types of landlords, of course. There's ones that are very on the ball in the market, I guess, like yourself, Toby, always looking at the market details.